Good morning, folks. Morning. It's Tuesday, the 10th of December, and it's 8 o'clock. It's the European Open. I'm going to get jumping straight into the DAX Technical Analysis for today. It looks like we're going to have a different type of day today. Yesterday was very, very quiet, and today, comparatively, it's going to be busier on the economic calendar. Let's just run through a couple of those to see what the outlook will be, and then we'll take a look through the charts. We'll run through futures as well. A little bit later on, we have the German ZEV expectations. They're due out and will be expected to show a small rebound today, so just keep an eye out for those. So that's going to be at 11 European time, Central European time, so I think that will be 12 UK time. Double check that. Might actually be 10 even. We also have UK GDP estimate for October, 10:30. We can expect some downside towards some initial ignition points. I'm going to leave that up here for the moment. 1339 was an interesting level to watch on the DAX, which we're looking like we're just piercing at the moment. The initial ignition point that I'm talking about would be this area down here. This failed high up here was interesting because after now having broken this level, the trend that we were seeing before is now broken. We can expect some downside for the moment. The ZEV may well change a few things a bit later on. Of course, it's election week. It's going to make things interesting over the next few days as we build into that. And there's the trade wars that are happening in China at the moment as well. That kind of does stilt things. So there's plenty on the docket for this week to watch out for. Okay, I want to make sure that the sound is coming through as well, guys. If you could just let me know, that would be good. All right, let's jump into this. So after a quiet session yesterday on the market, the DAX ended in the red. And it was very quiet yesterday. The majority of the session, in fact, we were pretty much trading in a confined range between 174 and 119 or 120. And it stayed there pretty much all the way up until mid-afternoon. We can now see that price made its way down to this ignition point from NFP on Friday. And as a result, we actually revisited a low volume node, a high volume node that we can see from Friday's price action here. Okay. Now, targets for the downside, if it just continues to move as it is at the moment, would be this point of control here that's exposed. It's a naked VPOC volume point of control from the 3rd December, so that would be Tuesday last week. Okay, it's exposed here still. We're waiting for that to come along. We're currently trading in a low volume zone, so you can't really be surprised that it's cutting through price action quite quickly. The simple fact that we've just taken out this low and that's a couple of days worth of support that it's just breached, potentially on slightly higher volume. Okay, we'll take a look through these charts in a moment, so there are some more interesting things to point out on here. But yesterday was pretty much lower for most European stocks, and again, it's continuing to focus on trade developments. There were things like the French finance minister came out warning that, you know, if tariffs are placed on French produce, then Paris is going to file a complaint, WTO. So there's a new dispute going on there. We had, I think it was Adidas and Merck were the losers yesterday on the DAX, about 1.5% down on each of those guys. MTU Aero Engines were the big winner at about 2.4% gain on the day. There were quite a few in the red yesterday. Donald Trump comes out and says that trade talks are going well. Okay, thanks Donald for yet again providing any detail on anything. Just words. Verbal diarrhea as usual from him. And a couple of other news stories that were interesting to watch, which I think you can just go and check those out. But I'm interested in the Intel chip that they're making for quantum computing. Yeah, looks like things are progressing on that front. Anyway, coming back to the DAX. It is potentially still going to be impacted by the UK general election because of the ongoing ramifications for Brexit. Jeremy Corbyn's confident that Labour have got a chance. We'll see. And we've got the YouGov poll that will be releasing its up-to-date projections later on today. Okay, so if we're looking on the profile here, the one thing that I'm finding interesting right now is that for the last 2 or 3 days, we've had profiles forming inside of each other. What do I mean by that? Well, if you take a look at the 12th, sorry, not the 12th, till the 5th, you'll see that the distribution range for the 5th was here. See that the next day, the distribution range was inside that. And you'll see for yesterday, the distribution range was inside that. Yep. So it's compression in the market. Got 2 inside days consecutively. And the market is starting to compress. And we've used this analogy a few times before, but imagine it like a suspension string, a spring, or any kind of spring, really. When you have a spring and you press down on the spring, what happens? You get a build-up of potential energy as the spring is loaded and it's ready to react once that pressure is gone. Yep. You push down the spring, you've got this build-up of potential energy, and once that force has now been lifted from the top, the potential energy turns into kinetic energy and it moves, doesn't it? Jumps, fires off. And the same thing happens with the market. Whenever you put pressure and compression on a market, it acts the same way like a spring would do. You get this potential energy build up in the market, and then when it does release and that pressure is removed, i.e. breaking through a particular zone of support or resistance, you get that kinetic energy. Potential energy moves into kinetic energy, and you get movement in the market. The same idea. Same principle, and you can see it on the markets. So that's what we're seeing at the moment. We are trading in a low volume zone, and from Thursday. I don't even count. That's Wednesday. I'll get there. After having broken through the previous day's range here. 13,000 is an obvious psychological target, but then this point of control is going to be another one that may well capture price. So I'm going to be looking out for that. Okay, looking at what we had yesterday on the profile. Again, I'm just going to clear out all of these lines here. There we go. What we had on the profile yesterday was similar to the previous day in that we had a double distribution, majority of volume happening at the top end. We had our initial balance forming very, very narrow initial balance forming at the top of the profile, oscillating around the previous day's point of control. We then had a range extension to the downside as it broke below the initial balance, created another low volume void in here, similar to the previous day's low volume void and the one prior to that as well. There's a whole zone here. Price seems to be reluctant to trade within. Often what we find when this happens, that on future days, price starts to fill that zone out. There's potentially a move back up to that level. Start to form a value area in there. At the moment it's in price discovery, so let that conclude and do what it needs to do. But after the range extension to the downside yesterday, we still managed to complete the value area in the top half of that profile, skip through the majority of the middle section, then form a second distribution, if you like, or higher volume zone, the bottom part of the profile, and we closed at the bottom as well. All right, key levels for today, we pretty much ignored the majority of them already. But the point of control on CFD is 145. You get a bounce on ZEV or anything else, and completely turn ourselves around from this 13,000 level, and that's a potential target, but that might not be today. If it's not, keep an eye on it on the charts for the future days. We're already below yesterday's low, down at the Camaria pivot for today. All right, what else? I think we can probably jump straight into the futures chart here. Let's just go and load that up. Spin up the server. Get back onto the screen for you. Okay. All right, so on futures, we're currently looking at the TMZ19, which is the DAX mini contract for December. Okay. Now, there are a couple of things that I pointed out yesterday on this chart, and really, they're just basic geometry lines, and they've turned out to be quite interesting. So I'll just talk you through it. The first one is this one here, okay, which is a down-sloping low-to-low trend line using 3 points, which is 1, 2, 3. Okay, and then just expanding the line out. And you'll notice that as price started to get into this expanding pivot line set, whereby you had this higher highs and lower lows being created, when you extend that line forward, you'll notice that the touchdown here was almost exactly on that line. Again, just an interesting observation more than anything conclusive. But the second one that happened was based on this zigzag. So you just got a simple A, B, C, D. If you draw a line through AD, expand that out, you often get a revisit on that line somewhere over here as price action moves. It's exactly what we had here. So we've got the ABCD there, draw a line through that. You'll notice that there was a little tag on it here as well. Didn't draw it. There we go. Little tag on it there. The C point was actually the line from the previous, the spot from the previous line. And once we failed to break below this low here on the NFP, we'll notice that we had the rally up to this point and it tagged the line twice. You could probably say that that was some sort of divergence with a higher high. There was probably a lower high on a different kind of oscillator, for example, but this was the failure high. Failed to break above this point. Off we went down. So again, just an interesting little bit of geometry that you can draw through the charts. I find that these lines are most accurate on the futures chart using a tick chart rather than a time chart. Okay. And if you're not familiar, a tick chart is the same type of candlestick pattern as you would find on a regular time chart. But instead of 5 minutes being required to complete a bar, it's based on the number of trades that are made. And this is a 200 tick or 200 trade chart. Okay. That's an interesting little thing. You don't need millions of oscillators and 150 different indicators on the chart and spaghetti in order to see these basic reactions to price action. Price action is king. All right, what else have we got? Let's take a look at this chart. This is very similar to the one I've already seen on the previous CFD, which was the key levels. Got the point of control up here at 150. And we're below yesterday's low at 1374, I think that is. And we're currently trading down here at the point of control from, get that right again, that would be Wednesday. Wednesday's point of control, but it came from the previous day. So if you remember on CFD, the point of control might have been a little bit lower down. But this is why futures is always a good sense check to use, because different information. CFD price is always based on futures, most often anyway. Sometimes it's cash, most often it's futures. So it makes sense for you to have a future feed so you can see what's going on. Don't just trust your broker because they don't care about you. Okay, so down here on the bottom of this chart, I've got a cumulative delta study. And what I noticed yesterday is that price action really struggled to create any sort of positivity on the delta, which meant that there were no real signs of any aggressive buying that was captured in the market. Any attempt at aggressive buying was met with absorption, sellers, and price failed to really get any progress to the upside. So what you'll notice is that we did spike above zero a couple of times, but the times that we did that, and each time was higher than the previous attempt, albeit weak. Time was higher than the previous attempt. It was met with lower pricing on the market. At higher highs on the delta, suggesting relatively more and more aggressive buying, yet price was failing to make higher highs, and in actual fact was making lower highs each time. So again, you could say that that would be divergent, similar to what you would get on RSI divergence, like that, and swiftly followed by, I would not exactly relentless selling pressure, but the delta pretty much gave out, and it was down for the rest of the day. Volume yesterday was a lot lower than what we have seen previously. One of the highest we were looking at is around about 60 to 70, 65,000, which was back here on the 2nd. And it's been progressively lower and lower and lower every day since. Every day since. And yesterday was really slow. Really slow day. Not a lot was happening on the market at all. All right, I'm not going to look into the numbers bars. Don't need to worry too much about that today. Do a quick sense check on these numbers for the profile on futures. A couple of exposed points of controls to watch out for. This one, okay, it does line up pretty similar with CFD. 988.70, 150. They're the obvious targets. 326. Current developing point of control is at 32, but we can ignore that. Yesterday we noticed that it just tagged the previous day's park. Just tagged it. And if you really do have a bearish outlook, then the further one to the downside is going to be that one there, which will be around about 750. Sensitive enough to drop on that tick. There we go, on 750. Okay, good. So that would be the numbers I'm going to be watching out for today. And I'm looking for us to, well, get a reaction from Zev. So it should be stronger than, we'll be getting a decent number today from that. And if so, it's probably going to buoy the market a little bit more. Bring it back up to its perhaps even back inside the value area from yesterday. Maybe that's wishful thinking. Quick look in on the strategy for yesterday. A couple of opportunities. I mean, it was really, really oscillaty yesterday. Oscillaty? Is that really a word? I don't think that's a word. Oscillaty. Okay, well, let's go with that. So yesterday was pretty oscillaty. Oh, it's horrible. Around VWAP. In that confined range. It tested the deviation low. It tested the deviation high a couple of times. Perhaps you could have played a deviation band strategy. Let's just quickly play with that idea. MPD lines, perhaps you could use. MPD is a statistical tool. I think it stands for maximum point of deviation or something like that. And you basically just take a line like a VWAP line or something like that, and you calculate a high and a low based on VWAP, which is also based on something like the previous day's range or something like that. So you divide the previous day's range by 2, and then you add and subtract that from VWAP, and it will give you these MPD lines. That from Billbauer, of how to do that on Sierra charts. It's a not complex combination of things, but there's quite a lot of stuff on there calculation-wise that you have to add up to get the numbers, but not complicated. It's just a bit of a chore. The result that you're left with is this, and you'll see yesterday that really we didn't challenge the MPD lines at all. So pretty much quickly conclude that idea may be not worth exploring. So I'll just come back to this. So it was oscillating and oscillating around VWAP. There weren't really any momentum-based opportunities, whilst there were some that fired out from the strategy, and they didn't catch any momentum. Each time we caught into some momentum, like for example this one down here, we would met with almost immediate deviation warning candles. So not a brilliant opportunity, fortunately. Okay, so let's just finish up today real quick with just again reminding you that the chart excuse me, on the DAX is on the website, thedaxtrader.co.uk. You can find out whatever tools you need on here. I've changed up the homepage just a little bit. So at the bottom of the homepage now there is a there isn't at the minute. Oh, there it is. I moved it up. Towards the bottom of the homepage, I've just added the chart on there, so you can use that if you need to. If you want to stay updated and get yourself on the mailing list, you can do so here. And I've added a couple of tools on the chart just to help out. So, for example, on the right, you've got a couple of options for the economic calendar. There's a little watch list if you want that. There's details for the chart, which is just basic API pulling in some information for technical analysis to give us a buy-sell sentiment index, I guess is probably what you call it. VWAP is still on the chart, and you can add indicators and tools to that if you want to. So feel free to play around with that. The live stream, I've just replaced the feed with an image. If you click that, then it will open up the live feed. There is the WhatsApp widget that's on there down there as well. And I think I've mentioned this already, but yeah, this was another new widget that was added. Very much for buying me a coffee. Appreciate it. Okay, so that is what I was going to go through for today. If you want to check out on previous articles, the most recent 2 I've done over the last few days were yesterday's technical analysis, talking about a little bit about the election, and the Forex trading signals update from last week. Strong week last week, 8% added, and 2019 is pretty strong for that, so I hope that continues to the end of the year. DAX has been challenging. I don't know how you guys are getting on, but it has been challenging, and it's been a difficult market to trade with the strategy that I like to use. Sometimes it goes like that, and that's why we don't just focus on one market. We should focus on a few, diversify just a little bit, because when it's not specifically hitting the right opportunities we want, should not be forcing the opportunity. Shouldn't be trying to get into a trade just because we're bored, haven't had a good trade for a few days. If that's the case, you need to be looking at other markets as well. No point in jumping into a risky trade that you're not familiar with. Ultimately, it will just lead to a bad result. Right, guys, so let's leave it there for today. Thank you for joining. Junior, sounds good. Thank you, sir. And also, we have PG Up, 721. Thank you. So, hope you have a good day today, guys. We'll be back again Thursday for another one of these, because tomorrow morning not going to be here. Mr. Fahrenheit _1. This was great. Well, thank you, Mr. Fahrenheit. Thanks for joining. And we do this pretty much every day, so feel free to come along and hang out with us for the European Open. And we'll be talking through DAX CFD and DAX futures using Sierra charts and my version of all of these different combinations of indicators. Got any questions? Shout out in the chat. Get hold of me on Telegram as well. Come and join the channel. All that kind of great stuff. And yeah, see you on the website, guys. All right, have a good one, and we'll see you on Thursday.